in Europe, in international developed.
In
so
92?
we're still underweight,
Wow.
but we've increased our equity allocation.
Then 92% U.S. equities?
Yes, and the
100%
100%, yes. So some in private markets, a lot in public markets. But the other area we like,
So some are in
dividend
private, okay.
stocks. Yes, some in private markets,
But look,
U.S. equities.
U.S. equities have worked really well for the last dozen years.
They have, and especially tech. But what we're seeing now, and this is also another area that we're investing in, so market S&P is down year to date, and it's certainly like since the peak Feb 19 or so, it's down. If you look at dividend stocks, though, for example, they're actually up. So there are plenty of areas or sectors in the U.S. markets that there's still opportunity there, and I feel more comfortable investing in.
So you're all in on the U.S.
U.S. equities.
It's interesting,
Yes.
right? So the idea of like, we've had a lot of conversations about American exceptionalism.
Yes.
Do you think that ultimately policies out of Washington will settle down?
I think we've been hit with a lot of bad news first in terms of, when the president got elected, there was a lot of talk of, and you saw an increase in performance because of talk on deregulation, pro-growth, tax cuts that will be extended. We've started now we saw a lot of policy and shakeups in alliances, and I think we've started with some bad news. So tariffs certainly being one of them, because they have caused a lot of this uncertainty, and it will continue until we have things figured out. But I'm excited to see about the tax cuts that get extended, and maybe there's more of them. There's more that will come in the second half of the year that I think will be more positive once the uncertainty around tariffs goes away.
We're basically exactly where we were election day.
Yes.
Right now on the S&P 500.
Yes. So it was a lot of enthusiasm of what will happen. The agenda comes out. It's about, immigration and deportation, and then about the tariffs. And we don't know from one day to the next what to focus on. We were talking about Liberation Day, April 2nd, and all of a sudden it's auto tariffs today. So once this calms down, there's more clarity around the tariffs, we can move forward and talk about the more exciting pro-growth parts that will help the U.S. market.
Really cool stuff.
Yes.
Always interesting, especially in contrast to some of the stuff we've had as of late.
Savesti Balafas, CEO at Goldvest Advisory, back with us here in our Bloomberg Interactive Brokers studio. Savesti, always good to see you.
Thank you.
Thanks so much for coming in, too.
Really,
good to have you here. Carol.
Yeah.
Is it the closing bell next? Is that what happens?
It better be.
Okay.
We're getting ready, folks. We're hovering near our lows. Stick around. We're going to head over to our TV colleagues. This is Bloomberg.
listening to Bloomberg Business Week Daily with Carol Nasser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, in just about 7 minutes, we're going to head over to our TV colleagues, count you down to the close on this Wednesday. We'll get to that in just a moment. In the meantime, some of the stories that are popping up on our radar, and this one has to do with Luigi Mangione.
Yeah, this is a read spike, meaning it was one of the most read stories in a very short period of time. I don't know the exact algorithm that goes into that, but
What? Oh, yeah.
fortunately, I get emails. This is pretty cool.
I know.
Keeps me on top of
We
things.
don't need a
I get
brain. We
emails.
just get...
If people are reading a story, I get an email about it, a news alert.
Mm-hmm.
Witnesses against Luigi Mangione have been subject to intimidation and even death threats. This is according to New York prosecutors who asked a judge to protect their identities.
Wow, this is witnesses against
Yeah.
Luigi Mangione. The judge should shield the names of all witnesses and the extent of their cooperation against Mangione, who is accused, of course, of gunning down a United Healthcare executive. He was Brian Thompson. This is according to some Manhattan prosecutors, Tim.
Yeah, Mangione's conduct has, quote, directly led to several instances of harassment, backlash, and death threats against both individuals who have cooperated with the investigation as well as prospective witnesses. Prosecutors wrote in a court filing that was made public today. Remember, he's accused of shooting Thompson, this is Mangione, on a Manhattan sidewalk last December. Then he's accused of fleeing and touching off a manhunt that ended with his arrest at a McDonald's in Altoona, Pennsylvania. Mangione has become a folk hero to many who believe he expressed their rage at the healthcare system.
Already, but witnesses subject to intimidation include those who worked at the McDonald's, the Altoona Police, and at United Healthcare and other unidentified healthcare professionals. Listen, you bring up this topic. My daughter says that they talk about this in college, and there are a lot of folks who are like, what did he do wrong? What did he do wrong? And this is just a reminder of healthcare. You bring up healthcare because it can be very frustrating for Americans, even those who have healthcare. Others who say the law is the law. He killed someone. Like, it's very, very clear. But you bring this thing up and you get some different points of view.
Well, listen to this. Prosecutors said Mangione also receives adoration from the public. Officers found 2 personal heart-shaped notes hidden with a new pair of Argyle socks given to him with clothing to wear at a court hearing last month. One note addressed to Mangione said, "Know there are thousands of people wishing you luck." And then a fundraising page devoted to his legal defense has raised more than $760,000, and it includes messages of support. Wow.
Let's just remind everybody, when police arrested him back in December, they found a black pistol with a metal slide, a silencer, live ammunition, several laptops, and a journal with handwritten notes, according to the filing. He also had Faraday bags to block signals from laptops and mobile phones, about $7,800 in U.S. currency and monopoly money. They're getting more and more details. And so as this case goes on, we'll know a little bit more about it. But wow.
That's wild.
Yeah. As I say, you bring it up, and there are some very strong views on each side of this.
Hey, the most read story in the last hour is these auto tariffs that are set to be announced today. The president is set to announce auto tariffs on Wednesday. This is according to the White House, a move that would escalate his fight with global trading partners ahead of a broader tariff push next week. Caroline Leavitt said Trump would speak from the Oval Office at 4 o'clock and would detail his moves. It was expected to start right at 4, Carol. He is still making comments to an event that was scheduled to start at 3 o'clock for Women's History Month.
So running a little behind.
So he's running a little behind. It looks like it's going to be tape playback now instead of live comments. Regardless, when we do hear the details, we will bring them to you.
I do want to point out that we've seen various stocks in the auto sector moving on this. General Motors, in fact, right now is down about 3%.
Ooh, that's one of my decliners.
Thank you very much.
No, thank you.
No, thank you.
Thank you.
Ferrari's down about 4.5%. The
Race.
ADRs, I know, great ticker.
So good.
So good, so good. Ford is just down. Actually, it's up now, but it was down about 2% earlier in the session. And I will say some of the auto parts companies have actually rallied, automotive parts stocks up because I guess if you can't buy a car, you're going to have to fix the one that you have, right? Because bringing a new car in, paying tariffs on it might be too expensive.
Unclear if auto parts will be covered under the tariffs.
Right. Exemptions or not?
We don't know.
Anyway, so you've seen some movement in this sector. So I'm assuming this might come up a little bit on our chat with our TV colleagues. All right, counting you down to the close on this Wednesday. Over to our TV colleagues. The closing bell starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Alex Steele, taking you through that closing bell. It's a global simulcast. It starts now with Scarlett Fu in the TV studio, Carol Masser and Tim Stenovic in the radio booth as we welcome our audiences across our Bloomberg platforms, as well as our partnership with YouTube. Carol Masser, a little bit of a turnaround from what we saw the last 3 days where this market was trying to move higher. A big downdraft today for a wide variety of reasons.
Yeah, absolutely. I think investors were kind of hopeful over the last 3 days. But having said that, once again, I think it's tariffs. Again, the uncertainty, maybe new tariffs, different levels of tariffs. We're waiting maybe, I guess, at 4 o'clock.
Supposedly
some news when it comes to auto tariffs. And we've seen certainly various names in the auto space moving around on that news today.
It does seem the president is running late, so we're not going to get those comments until after 4 o'clock. But still, the auto sector getting hit as a result of uncertainty there, Scarlett.
Yeah, you look at the economic data, and on the whole, durable goods looked pretty good. It beat analyst estimates. But when you break out and just look at core capital goods, which backs out like aerospace, that unexpectedly declined. So really, it's more proof, and this time it's hard data showing that companies are holding off on their capex.
Guys, I'm also going to go to the fact that this is really still about big tech, because you look at the equal weighted index, that's pretty much flat. I appreciate that small caps are also getting hit, but it's the Mag 7 that's really dragging everything down. That's not really a tariff story. That's an AI infrastructure risk story at the end of the day.
Yeah, and that's really evidenced by the fact not only what you said with the equal weight, only down 0.2%, but Dow Transport's up about 0.6%, as we are seeing a bid come in to, well, old school stocks, FedEx, Union Pacific, trucking companies as well. Still, we do have red across the screen for the primary indices here on this Wednesday afternoon. The Dow Jones Industrial Average is going to close lower by more than 100 points, or roughly about 0.3%. The S&P 500, the benchmark index, down more than 60 points, or about 1.1%. The NASDAQ indices each down about 2%. The composite down 2%. The NASDAQ 100 down about 1.8%. The biggest drag, of course, the Mag 7 NVIDIA, leading that whole cohort down. The Russell 2000 also getting dragged down by financials and energy stocks, down about 1% on the day.
Yeah, and having just a quick check on the S&P 500, kind of an even split, guys. 266 names in the index, gaining ground today, Scarlett, 235 to the downside.
Yeah, but because of the heavy weight of tech and tech-related companies, you're seeing that big drop in the index. You have infotech, communication services, and consumer discretionary, which basically holds all the Mag 7 names down by at least 1.5%. The sectors that are green, all the smaller sectors, consumer staples, utilities, energy, real estate investment trusts, they tend to be more defensive as well.
All right, let's get to some of the individual gainers. GameStop on that list, stock up more than 11% here at the close. This company, of course, we talked about it after the close yesterday. The meme stock frenzy that we saw back with retail traders really coming off of COVID and so on. Its company's board saying it approved a plan to add Bitcoin as a treasury reserve asset. Company did also report fourth quarter net sales that tumbled 28% year over year. Just a reminder that the fundamental business certainly not so interesting, but nonetheless interesting for investors in today's session. Dollar Tree up more than 9% at its highs today, finishing the day with a gain of just shy of 3% in the trade. The news today, company saying it's going to sell Family Dollar, the chain, for about $1 billion to Brigade Capital Management and Salem Capital Management for a decade after buying the business. I remember when this news and the consolidation of these two big players in the sector. So that certainly coming out in today's session. And then Cintas Corporation, its number one gainer in the S&P, was top two in the NASDAQ 100. It's an $83 billion market cap company, workplace uniform provider. Did come out with its full year earnings per share guidance that beat the average analyst estimate. And so investors, maybe not an exciting company, but investors certainly found it exciting in today's session.
All right, let me just jump in because we did have results out of Petco, and the ticker is my favorite, WOOF, W-O-O-F. Fourth quarter net sales meeting analyst estimates, $1.55 billion. The consensus was for just over that amount, $1.56 billion. And in terms of other numbers, the net loss, the bottom line, was $13.8 million, wider than what was anticipated, which was $10.3 million. The stock moving a little bit higher in after hours trade by about 1.2%.
All right, keeping an eye on that stock. I'm also keeping an eye on Stocks that moved lower in today's session, NVIDIA is the one to talk about because that just dragged everything lower, whether we're talking about the S&P 500, the NASDAQ 100, or the NASDAQ Composite. It was the biggest contributor to the downside today, down 6%. Got hit for a couple of reasons. It started the day lower after this report from the Financial Times late yesterday that said NVIDIA products could be at risk from energy efficiency rules for the use of advanced chips that would prevent Chinese companies from buying NVIDIA's processors. Then we saw shares of companies tied to AI today fall as a result of growing concern around spending for AI data centers after TD Cowen came out with another note that said Microsoft has walked away from new data center projects in the US and Europe given, quote, oversupply relative to its current demand forecast. NVIDIA down 6% today. GameStop was up. GM, General Motors, was down 3.1%. I'm watching shares of all the U.S. automakers, in fact. President Trump has been set to announce details on tariffs. That was set for 4 p.m. We'll bring you those comments as soon as we do get them. He was set to speak from the Oval Office, though. Analysts have estimated that new tariffs could add thousands of dollars to new car prices. And finally, shares of Vita Coco fell today by 11%. It's the coconut water company. This after Ningi Research issued a short report on the company. They argue that 2024 sales growth underperformed category performance, and Vita Coco's market share, quote, has been falling since early 2023. Vita Coco, for its part, out with the statement that says there are numerous inaccuracies and mischaracterizations in the short report. Vita Coco also reaffirmed its disclosure from February that it expects to lose some regions with certain private label retailers during 2025 due to inventory constraints. Shares falling today by about 11%.
All right, I'm going to go to the bonds, guys, for a second. What's so interesting is you had the sell-off in the equity market and you had a sell-off in the bond market. You would think that with the risk-off mode that you'd see a move in the dollar and in bonds to the upside, but we didn't get that. Yields higher on the back end by about 4 basis points. We did get a 5-year auction today. It was not as great as the 2-year. We get 7-year tomorrow as well. But for now, the bonds not getting that safe haven bid that maybe the dollar didn't get, guys.
All right, guys, we talk about a market where a lot of people are sort of looking for a direction or at least looking for a little bit more clarity. And I guess it raises the questions as to sort of what moves the needle next. Are we going to wait for that announcement from Trump and the tariffs? Do we wait for the next batch of economic data, or do we wait for earnings season, which quite frankly is only, about 3.5 weeks away?
Yeah, I kind of can't wait for the commentary with earnings. I hate to say I'm ready for another earnings season, but I kind of am. But
I am too, yeah.
Right, to kind of get some clarity of what's going on in C-suites. We keep bringing in, leaders, people who are managing money. We had a guest today that, new money put to work, and they're like, we're not going to put it anywhere. We're going to kind of keep it in cash or cash-like investments because we're just not quite sure where things are going right now, and they want things to settle down. I
think April 2nd is the next catalyst here. That's what the president calls Liberation Day. We're supposed to get more details on tariffs. Potentially we'll get more today. I think there's just been so much waiting and sitting back and saying, wait a second, okay, what are these tariffs going to look like? If you're the CFO of a company and you want to deploy money to for a CapEx project, for example, you're going to wait to see, how much copper is going to cost. How much steel and aluminum is going to cost? What's going to happen when it comes to the consumer if things get more expensive? I think there's a lot of uncertainty there, and hopefully we'll get more clarity April 2nd.
Well, the tricky part, too, is once we do get clarity, it's pretty easy for the president to remove the tariffs or change the tariffs after they've been announced. And we've seen several instances of something happening, and then a couple of days later, it's rolled back, or parts of it are rolled back as well. So that just leaves all these companies paralyzed.
That's the art of the deal, Scarlett.
That's the art of the deal. Ah, right.
Are you familiar with it?
I think there's a book by that name.
It's negotiation.
Which is why, though, I find so interesting that the Mag 7 got hit so hard today on totally different reasons, right? Like we had the Microsoft and TD Cowen note. You had Tesla getting a downgrade to hold. You had NVIDIA and those energy rules you were talking about, Tim, and Google. You have an analyst saying that potentially the youngsters are going to go to ChatGPT and not Google for search. Like these are individual issues that have nothing to do at the end of the day with tariffs.
Yeah, absolutely. And I think that's what's creating so much uncertainty. These are much more structural, much more long-term, and don't really have historical precedent in a lot of ways. I do want to just go back real quickly to one of the stocks that you were talking about, Tim, and that was GameStop, which had a phenomenal day today. But here's the rinse and repeat that we've seen so many times with this, a share offering. $1.3 billion in a private placement, and that now has the shares down in after-hours trade by about 7%. Why do people do this to themselves?
I don't know. Maybe because it's a Bitcoin mining company now or something?
Is that what it is?
Bitcoin? It buys Bitcoin, right? Maybe
It'll
that's
still be a
one thing?
proxy for Bitcoin.
I don't know. Maybe that's a thing. You do that. And
I don't know what kind of company it is anymore.
Yeah.
Kind of crazy. All right, guys, that's a wrap. We'll see. Wait for some more news out of the White House and potentially on those auto tariffs. That is a wrap. Our cross-platform coverage on radio, TV, YouTube, and Bloomberg. Alex is heading out. Scarlett and Romain continuing there on Bloomberg Television, and Tim and I continuing right here on Business Week.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It is Bloomberg Business Week Daily. That is Carol GameStop Masser.
GameStop.
Yeah.
It's
I
like,
guess.
what do we-
Is
I
it a
don't
meme
even-
stock again?
I don't know.
I don't know.
I don't understand.
You know, they don't do
What
any.
is it?
Well, they don't do any. You don't get any clarity with earnings from them. They don't
No.
really have anything in a statement. They don't really have a call. So
Would you just throw Bitcoin at something?
I don't know. I don't know.
I'm just saying.
It was a moment in time.
Moment in
And
time.
it's still there quarterly.
Oh, yes.
Hey, speaking of a moment in time, we do expect to hear from President Trump setting to announce tariffs on the auto industry. This is according to the White House. It would be a move that escalates his fight with global trading partners that have a broader tariff push next week. The president is still making comments right now from the East Room of the White House. That is where he's speaking at a women's history event that was scheduled to start at 3 o'clock. That started a little later, and he's making comments live there, so we're not going to get any tariff news for a little bit. We will bring you those comments, though, when we do get them. I want to see what Brooke May has to say about this, because she's managing partner at Evans May Wealth. They've got about $1.3 billion in assets under management. She joins us this afternoon from Indiana. Brooke, you argue that the conversation has really shifted from inflation, kind of done with that. Now we're thinking about tariffs. But what is the conversation around tariffs?
To your earlier point, it's uncertainty. Right now, our concern is that the uncertainty will lead to an economic slowdown more than actually the facts at hand. When you look at CEOs recently that were surveyed, the survey took place late January, early February. They indicated that they're optimistic, more optimistic than they've been in recent quarters. That said, their biggest concern is geopolitical instability. And that's tariffs, in addition to a few other policies. So the sooner there's clarity there, the more likely they are to hire and to spend and to, and for there to be additional business investment.
So it is interesting when you think about kind of the environment that's out there, top of mind for you, because I think the headlines are fast and furious. They can change on an hourly basis. They can certainly change on a daily basis. They can change on a weekly basis. But is there kind of a longer term thought that you have about the environment we are, certainly from an investment perspective? And that could even be one that we don't want to do anything until it settles down.
Yeah. We're setting the expectation with our clients that they can expect volatility in the near term. Until there's more clarity, we're going to see a lot of ups and downs in the market. That said, right now the unemployment rate is 4.1%. We've got a pretty healthy labor market. Even though we only added 150,000 jobs in the last read, we still have more job openings than we do unemployed. So the labor market's what's held up this economy the last few years. And even though sentiment has shifted, that's not necessarily a good indicator for future market performance. We've got a $6,500 or 6,500 price target on the S&P between now and year end, which would be about a 14% bump. And again, once we have some more certainty, I think the market can move higher.
So, Brooke, I'm wondering about something that Alex, it was Scarlett who just said this on our simulcast.
Said what?
It's this idea that tariffs are, like, yes, maybe we'll get some clarity next week, but the president has shown that he can change his mind when it comes to this stuff, especially, if he has an off-ramp with tariffs. If government of Mexico or the government of Canada, for example, proves that it's taking action at the border to prevent what he argues is a porous border and fentanyl being allowed into the U.S., or maybe other parts of negotiation. So even if we do get some clarity on April 2nd, there's still going to be this uncertainty about whether he can just take back whatever he said on April 2nd in the coming days, no?
Absolutely. And I think that we're going to see that for the next 4 years.
So get used to
it's
it,
to be
in other
expected.
words.
Well, wait a minute. So
There's not much we
that's-
can do about that.
Wait a minute, because I think there's an expectation that things are going to settle down.
Yeah.
So are you saying that it's going to be 4 years of volatility?
Not necessarily. I do think, though, we need to accept the fact that there could be pivots at any time. Right now, we've got a broad range of initiatives that they're trying to tackle. And while we'll probably see pivots for 4 years, I think that there'll be less as time goes on. The next few months, I know they've got a very robust agenda that they're trying to push through. And I think a lot of this is to set themselves up for an extension of the 2017 tax cuts and possibly even a lower corporate tax rate. So once they've been able to demonstrate that there might be tariff revenue or other income streams, then I think that we'll still see some pivots, but they might not be as frequent.
Do you think the tax cuts are priced in fully right now? Like, is that the expectation the market has?
I think an extension of the 2017 tax cuts are priced in. However, I don't know that we fully priced in a corporate tax rate that would be lower than what it is today. And as we know, that would be pretty accretive to earnings. So I think that there is some upside if we actually see tax cuts, a corporate tax rate cut.
If we actually see a corporate tax rate cut.
If.
Are you optimistic? Are you pessimistic? Where do you fall on this? There's not a huge majority when it comes to Republicans in Congress.
Yeah. I think that it's pretty imminent that the 2017 tax cut extension will go through. I think it's going to be a little bit more difficult to push through a corporate tax cut. I think that they're going to have to demonstrate that we're going to have tariff revenue or other cutbacks to actually be able to push it through.
Is all of this going to create, bottom line, an economy in the United States that continues to grow and that maybe outperforms other developed markets?
A corporate tax rate could. The other initiatives, if we possibly see less regulation, that could be a tailwind for some companies. But reality is, U.S. businesses figure out how to make money in all types of environments. And if we've got a strong labor market, people are going to spend, and ultimately the economy is going to stay afloat.
Do companies have figured out ways to pay a lower effective tax rate? So is it really that big of a deal if the corporate tax rate is lowered because companies have done such a good job of figuring out how to pay less in taxes?
Some have, and some don't. Some haven't been as effective. So there are companies that would benefit. I know that a lot of the big tech companies have been in the headlines for the low amount of tax they pay, but that's not true across the board. So there would be some companies that benefit and therefore make it accretive to earnings.
Hey, Brooke, one of the things that our Alex Steele just stressed, and rightfully so, in our simulcast chat on the close, the S&P 500 equal weighted index was just down about 0.2% today, compared with about 1.1% drop in the S&P 500. So it was a lot of those big cap tech names that really dragged down the S&P 500. That equal weight, just a little bit lower, that difference says what to you?
It's exciting to see broadening in the market. The last 2 years, big tech, specifically, the Mag 7 has really been where the performance has come from. We saw somewhat of a shift from 2023 to 2024, and now we're seeing even a greater broadening today. And that's what we want. That said, we think that there's some opportunity right now in big tech, but not all Mag 7 companies are created equally. Today, we had some negative news out of NVIDIA, but systemically, the company, not much has changed. They're trading at 26 times forward earnings. And when you look at their growth rate, it's actually less than their PE, or it's higher than their PE ratio, which is the type of company you want to be invested in. However, you look at Tesla, and it's trading at 100 times forward earnings, and the growth rate is really paltry relative to the PE. We're seeing slowing sales in China and Europe, and probably some slowing sales here in the US. So I don't think you can go in and just buy big tech. In this environment, you have to be selective, but there are some opportunities out there, in addition to looking at the broad market or equal weighted.
All right, we're going to have to leave it there, but we appreciate you taking the time this afternoon. Brooke May, managing partner at Evans May Wealth, joining us from Indiana, $1.3 billion in assets under management. Carol, I found the Institute on Taxation and Economic Policy, nonpartisan institute. They found that America's largest consistently profitable corporations saw their effective tax rates fall from an average of 22% to an average of 12.8% after that Trump tax law went into effect in 2018.
I'd like a 12% tax rate.
So how much lower can it go?
For me? Or for them?
For them.
This is Bloomberg.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a developing story, and a federal appeals court panel has kept in place a pause on the Trump administration's deportation of alleged Venezuelan gang members to El Salvador without a chance to object. Stocks lower, the Dow, the S&P, NASDAQ all ending the day in the red. Continuing concerns about trade and tariffs, with the S&P down 64, 57.12, a drop of 1.1%. 2.1%. Dow Industrials down 132, a drop there of just about 0.3%, while the Nasdaq Composite Index was down 372 points today, a decline of 2.1%. Russell 2000 Index of small cap shares also lower today, down by 1%. The 10-year 4.34%, the 2-year 4.01%. Spot gold $3,020 the ounce, little changed right now. West Texas Intermediate crude up 1.2%, $69.83 a barrel, and Bitcoin down 0.8%, 87,158 on Bitcoin. Jeffrey Financial Group's fiscal first quarter earnings declined due to a drop in investment banking and capital markets revenue, hurt by uncertainty around U.S. policy and geopolitics. After hours, Jeffrey's now down by 4.8%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellett. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate that. Once again, we are waiting to hear from President Trump, who is set to announce tariffs on the auto industry. We'll bring you comments as we do get them. Researchers from McKinsey recently determined that women spend less time on the job than men in comparable roles and career paths. 8.6 years for women versus 10 years for men, and that they were more likely to make decisions putting them in roles and industries that were dying.
Gosh, it's kind of...
It's really grim.
Yeah.
Large career gaps, especially during child-rearing years, and the desire for more flexible work took a toll. Listen to this, Carol. Such time and career choices, they said, docked women's lifetime pay by a cool $500,000.
That's a lot.
Women, they urged, need to choose careers in fast-growing fields and spend more time on the job.
Wow, that's a strong message.
Yeah.
I mean, that's a big difference. And if you think about people living longer and maybe on their own, how do you support yourself?
Simone Foxman writing about this for Bloomberg News. Check out that story and more if you're interested.
All right, curious what Alison Kosick has to say about all of this. She's the author and journalist who has worked at CNN and is a freelance correspondent for ABC News. Equal pay is just one of the things she tackles in her deeply personal new book. It's entitled What's Up with Women and Money, How to Do All the Financial Stuff You've Been Avoiding. She joins us from Long Island. You know, we've been talking about your book and, very deeply personal, your story. You go there right in the beginning of the book. Tell us about and share with our audience why you set about writing this.
Yeah, great to be on your show. Thanks for having me. So I wrote this because, yes, I was CNN's business correspondent, often reporting from the New York Stock Exchange. But at the beginning of my time there, I wasn't involved in my own financial life. I let my husband handle all things financial. And that was not a good decision, because when the marriage went bad, when I wanted to get out of the marriage, I felt stuck. I stayed in the marriage longer than I should have, years longer than I should have, because he kind of knew where all the money was and how to handle all the money things. And I had 2 kids under the age of 10 at the time. What if I made a mistake? What if I lost all of our money? The difference is that I just didn't have the confidence to make those big financial decisions. I didn't have the experience of making the decisions over the course of my marriage. And that, in essence, cut down on my confidence in my ability to make those decisions. But as I got through that, I realized that there are a lot of women in different kinds of jobs, high income scale to low income scale, married, divorced, widowed, single, who feel the way I felt, that, they don't have any kind of involvement or as much involvement as they should have in their own financial lives. And it's not something that women talk about because, we don't want to be seen as unintelligent. There's also a lot of embarrassment and shame around it as well.
Why do you think men are the ones who end up doing this stuff in a lot of relationships? Like, you have a chapter in here on how to buy a car with confidence, understanding insurance, negotiating, in your words, like a man. Why are men the ones who usually do this in relationships?
I think if I could answer that in one reason only, I think there are many reasons, but I think the biggest reason is that it is cultural. There's a cultural aspect that women have with money, and I think it starts early when we are girls. And whether we like it or not, girls and boys are socialized differently. And it's not that girls are told not to care about money. It's just that boys are often introduced to the family finances earlier. They're encouraged to be financially independent earlier. And so you've got these girls who grow up being uninvolved, and they can grow up to be women who avoid money issues, and that avoidance can be compounding in the way that you avoid something long enough, you become fearful of it. And so lack of interest can lead to a lack of information, and that lack of information can lead to a lack of confidence in being able to manage all things financial, whether it's managing your spending, managing your debt, being able to invest, and being able to negotiate your salary. All of that hits confidence. And I think if I'm going to answer it in one answer only, I'd say it's the culture. It's got to be the culture.
So, it's interesting. Carol mentioned this is a deeply personal book, and I mean, it really is. You don't just talk about your relationship and your marriage that prompted you to write this, but also your upbringing and your relationship with your father. And I think a lot of people would say that was really challenging. I'm wondering, though, as a parent now, how you make sure that your kids are equipped to make these decisions independently.
Very good question. I'm not a perfect parent, and I've got 2 kids. One's 19. My son is 19. My daughter is 22. They are invested in the market. Yes, I've taught them how to do it, and I've encouraged them to consistently invest as much as they can. I've explained to them the difference between savings and investments, and what the difference is, and why it's important to invest your way to wealth, because you can't save your way to wealth. The thing is, these things are not taught in school. Mm-hmm. So there's only so much parents can do. And really, I think so much of this is really just taking the effort to learn it on your own, or through osmosis, or hopefully you've got parents to guide you. I'm certainly trying to guide my kids as much as possible.
It's interesting, Allison. We talk about this a lot here, and I feel like you've obviously, you're a journalist, and I know this topic has come up over the years, and I would say for those of us who've been doing it for a while, just like yourself, I feel like I could go back 10 years and have this conversation. 20 years I could have this conversation. I think about CEOs, female CEOs who've come in and talked about even that in their households to some extent. So I'm wondering, why haven't we? We've talked about financial literacy forever. Why isn't that happening? What is it that we are missing? Because you can teach stuff at home, right? But I wonder if we made it part of our curriculum from kind of a younger age, teaching kids about money, the importance of money, and all that good stuff, how different things might be.
Oh, I am 100% with you. And to be honest with you, I don't know why this stuff isn't really being taught. And I think it's actually beginning to be taught. It's being thrown into the curriculum. I don't know how much really, and I'm wondering if maturity has a lot to do with it, because can you imagine getting into all the finer details of investing with a 15, 16-year-old? I think there's also maybe a mindset here of younger people. I know when I was younger, and it may have just been because we didn't have access to investment platforms like we do today,
right?
In fractional investing, I think that you think that you have got, 15 years old, let's say they bring it into the schools at 15, the curriculum at 15 years old, you'll pay attention, but I guess how seriously will the kid take it, because they think they've got forever to start investing. And I think unless the curriculum really hits home about the importance of investing early and consistently, but investing early, maybe then it'll catch on. But I think you make a really good point. And I did write this book through a journalist lens. So not only did I get the tips and tools of financial literacy, I wanted to tell stories. So not just inspirational ones through the celebrities that I interviewed, but also names you wouldn't recognize. A lot of these people, a lot of these women are anonymous because they are ashamed that they're in this situation. So for example, I interviewed a venture capitalist who described money as something that she was fearful of. And she, at 53 years old, she hadn't invested in one retirement account, didn't know the basics of personal financing, and really felt overwhelmed. And this is a woman in the venture capital space, who was highly, highly successful, but she had not invested in herself because she didn't have the confidence. I mean, it is really amazing that we can be badasses at our jobs, but then in our own life, there's this disconnect that's really inexplicable.
Yeah, and I guess what I would say in terms of, I agree with you, like a teenager, they're going to be like, investing, Warren Buffett, like all that stuff might go past. But just the idea of debt versus not debt, savings versus, just kind of those kinds of things. Or like, you even talk, I love this idea. I think I even remember my parents like having an envelope in the drawer of cash that was like the cash for the month or something. And we don't really do that anymore, right? Everything's digital, but having that concept of like a digital envelope of this money is my spending money, this is my savings money, like those concepts are really clean and pure, and I think make a lot of sense. And I do think about even today of giving a kid and saying, here's some spending money, that's it. You've got it for the month, figure it out. Like that's teaching them to budget.
Right, and getting them involved. And as parents, your kids are watching you. They're watching if you're piling on debt onto your credit cards. They're watching, how you shop around for things. If the refrigerator is broken, do you just buy whatever, or are you taking them with you to go shop around and or at least online to shop around and get the cheapest price? I think involving children in money details is really a first step. It seems so simplistic, but it really is a way to get them involved early.
Okay, we have been talking about your book in the newsroom and you coming on, and I have a bunch of questions actually from one of my producers. We only have time for one. We only have about a minute left here. But if you've got two 401k plans from different employers, how do you determine whether to merge it or just leave it alone?
I've been told to merge them, but you're asking the wrong person. I'm not a certified financial planner. I can't even give you financial advice. Okay. That is not my realm. So like I said, I approached this book as a journalist. I did research and interviews to get these topics on paper. And they'll have to go talk to their at CFP.
All right, that's fair. Actually,
that's good advice, though.
Actually, that's great advice. And she's a journalist too, and I know she'll end up doing research. 30 seconds left here. There's a lot in the book. It's very usable. It's really fun. What's one piece of advice you want to leave our audience with, just quickly?
Ladies, be involved in all things financial in your house. Have great visibility onto what's happening. Know what your assets are. Know your debt. Know who your beneficiaries are on your accounts. Know the passwords to your accounts, and especially know how much debt you are carrying. And get involved in the tax process as well. It's so as we're nearing tax time here, be involved in filing your taxes.
All right. Really fun. Good luck with everything. Allison Kosick joining us. Her new book, What's Up with Women and Money, How to Do All the Financial Stuff You've Been Avoiding, joining us from Long Island.
Okay, so now we know how to hold on to our money.
Check.
Okay. Now we're going to talk about how to spend it, okay? Because next we're talking to the CEO of the private aviation firm Sentient Jet. That's next on Business Week Daily.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. A down Wednesday, 3 days of relative peace broken on Wall Street. Big tech driving major stock benchmarks and averages lower as concern about a trade war's impact on the economy and inflation resurfaced to squelch risk appetites. The Dow, the S&P, and NASDAQ all declined, finishing very much in the red today. S&P 500 index down 64, ending the session at 5712, down 1.1%. This after 3 days of gains. The Dow down 132, a drop there of 0.3%. NASDAQ down 372, a decline of 2%. The 10-year yield 4.35%, with a 2-year 4.01%. Spot gold up $1.50 the ounce, 3,021. Little changed on the day. West Texas Intermediate crude oil just below 70 a barrel, 69.98 on WTI, up 1.4%, and Bitcoin down 0.7%, 87,285. Savasti Balafas is CEO at Goldvest Advisory, and right here on Bloomberg Business Week Daily, she talked about the market outlook and Washington.
I'm excited to see about the tax cuts that get extended, and maybe there's more of them. There's more that will come in the second half of the year that I think will be more positive once the uncertainty around tariffs goes away.
Savasti Balafas of Goldvest Advisory interviewed right here on Bloomberg Business Week Daily. Moments ago, we heard from Jefferies Financial. Fiscal first quarter earnings declined amid a drop in investment banking and capital markets revenue. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Okay, you might remember we recently talked about this Bloomberg story. It was about Air France unveiling a redesigned first-class cabin dubbed La Première, seeking to attract well-heeled customers with travel experience that it says is actually kind of similar to stepping into a private jet.
We'll see what our next guest has to say. The new cabins, I just want to lay it out for everybody, just remind you, each of the 4 enclosed suites feature 3.5 square meters of private space with a seat and a chaise that converts into full-length bed. The cabin took about 3 years to develop. It's about a quarter more spacious than the previous iteration.
I think it's $10K round trip.
10K, yeah, not inexpensive.
But not private jet level.
All right.
Very, very far from private jet.
So let's see what Andrew Collins has to say. He's president and CEO of Sentient Jet, back here in our Bloomberg Interactive Broker studio. Good to have you here. It feels like everybody's chasing what you guys are doing. How are you?
I'm great, and it's great to be back. Thanks.
It's nice to have you here. My understanding, we got to talk to you as we were kind of busy, frantically working ahead of talking to you. You've been busy too. Tell us what your world is like right now.
I'm on the road a lot. Private aviation, as you remember, had the boon in COVID,
right,
and it really hasn't slowed down. And so for Sentient, we're seeing about 15% year-over-year growth right now, and the forward bookings are actually encouraging. So, you know, I know there's kind of a lot of pausing in the markets right now and people scratching their head a little bit, but from a travel perspective, I'm really not seeing a lot of leakage.
Why do you have to travel so much?
So we have offices all over the world. So we have headquarters in Cleveland, Ohio, in Boston, here in the city, and then we have offices in Mayfair. We have a large operating center out in Farnborough in the UK, maintenance in Milan. So we're all over the world.
But when you're traveling, I mean, you're not selling the product. So
I'm always selling the product.
what does that mean, though? I mean, it's the Jet Card. You guys are known for the Jet Card.
Yeah.
Which is a unique offering in a space.
Right.
And you know, you're the same parent company as FlexJet, which also offers a different type of product.
Absolutely, yeah.
But how do you explain how the business model sort of complements that?
Yeah, so there's two differences, right? FlexJet is probably the premier private aviation company on the globe, and it's got a fleet of 300 aircraft and some of the newest aircraft. Sentient has just surpassed its 25th anniversary, invented the Jet Card, and it's an asset-light model. So it leverages pre-screened operators around the globe for usage of their aircraft. So we have technology that harnesses and schedules aircraft all over the world, and it allows for a different type of way to fly an entry point.
Are you ever paying FlexJet to operate for your customers?
There are some non-core fleet aircraft that occasionally we do leverage, but most of the time we're using more of a Part 135 operator in the United States or in Europe.
So this would be like a small fleet based somewhere
it
in
could
the world
be, yeah, exactly.
that has passed your
certification
certifications.
standards, correct.
And you're essentially paying them to then take your customers
Correct.
somewhere.
We handle, and so it's interesting when you mention commercial, private aviation's all about that consumer promise and that service level. So it's kind of like curb to tail. And so, yes, you might be able to replicate in-cabin experiences, but outside the cabin, getting through like a commercial hub or something like that is very different than, you know, pulling right up to a tail and getting on a private aircraft. You really can't emulate that experience. And so it is, you know, interesting in that regard. But yeah, we're selling sort of time manipulation at the end of the day, right? A jet card allows you to, everybody runs off the same watch, but it allows you privately to manipulate the time.
What's the most difficult part of your business right now?
I think the most difficult part of our business is we set a really high bar for our consumer standard. So it's the service level. It's the, you know, getting everything right, having all the levers in the row, right? And making sure you need technology, you need the people. And truth be told, you really need the experience. We have a deep bench of experience, some people that have been here since the beginning with the model. So I think that the consumer, especially because it's gotten more popular, has also a very high expectation, especially because of the price point. So you've got to deliver. And if we don't actually own that asset, we've got to make sure that we're delivering on that service level and tying that asset to the consumer promise.
Safety in this environment, because over the last few months, there have been a spate of these high-profile air travel incidents in North America. They've got the public concern, some happening with commercial airlines, but several happening with private airlines, including a real tragedy in Arizona, and then this close near miss in Chicago with Southwest and a FlexJet jet. How do you look at incidents like that, and how do you make sure that the product you provide is safe?
So I know our product is safe. We invest millions of dollars in safety. We have a chief safety officer, independent safety advisory board. We have an SMS, that's a safety management system for those that don't know what that is, that's very advanced with the FAA. And so at the end of the day, a lot of times, and the report is just kind of being worked through in that particular regard in that incident.
Yeah, the NTSB report came out last week.
It's all about like a lot of factors, right? So there's the factors we can control, and then there's the factors around you. So in that case, you're going to find that it's likely that there's some airport things that are happening. There's some glaring and some things like that. It's not as obvious as one thinks, but I will tell you that we are, you know, we have an incredible safety record, and we invest heavily in it. And I've always been impressed with what we do and how we respond and how we react to things. And we open our doors up to anybody in that regard. I will tell you that everybody talks a good game about safety in aviation, but you really have to put your money where your mouth is. It is a big investment, it's a big expense, and it's not something you would ever shortcut.
Andrew, how do you make sense of kind of the environment we are? You know, we use words like potentially recession and volatility and uncertainty and, you know, the kind of world breaking apart in new pieces. How would you describe it from what you see, especially as you travel around the world and have global customers?
So it's interesting. In the States, I see still the robust demand. Like I said, that we're seeing the growth. When we see a slowdown, and we've seen pockets of it over the years for moments and pauses, like the beginning of COVID and things like that, you tend to see a shift in your customer base. So you might lose some volume, but you generally tend to have pretty decent flying throughout. We saw it in the financial crisis. We actually maintained a whole different segment that flew. So there's a resiliency to it. Additionally, our customer base tends to get impacted, but impacted different than, say, somebody on, you know, your typical Main Street. So I think we're seeing, you know, enough flying. In Europe, I see a little softness, to be honest with you.
Interesting.
And, you know, we're doing a lot of investing and a lot of building over there. So we're almost counter in some of the regards. Other people are kind of looking at it differently. We're plowing ahead with investments and an investment strategy over there.
20 seconds, why Europe?
Why Europe?
Yeah.
Because outside of the United States, the European Union is the second biggest private aviation market.
Sorry, I cut you off.
Remind us how much the jet card is per hour.
Jet card, average jet card is about $250,000 for 25 hours.
Okay.
And it can be a little lower on a light jet. It can be significantly higher on a large cabin.
So 10,000 an hour?
Give or take, yeah.
Give or take. Cool stuff. Andrew, thanks so much. Travel safely. Andrew Collins, President and Chief Executive Officer of Sentient Jet, joining us right here in studio. You are listening and watching Bloomberg Business Week Daily.
are listening to Bloomberg Business Week Daily with Carol Masser and Tim Stenivek on Bloomberg Radio and Television.
With colleagues like you, Carol.
I am a little surly today. The dog.
Carol just said,
the
thank
dogs
you.
that get,
She just said, thank you so much. And I was like, what did I do? She's like, oh, not you. She's talking to Alex.
there's a lot of things I am. There's a lot of things I'm not. I'm pretty
You're
honest.
She's honest.
Painfully. Ask my family. I'm pretty painfully honest. All right, folks, you are listening and watching Bloomberg Business Week Daily. Carol Masser, Tim Stenivek, live here at New York headquarters for Bloomberg.
Let's take a look at some stocks on the move today. Bloomberg News equities reporter Alexandra Semenova is here with Wednesday's stock movers. Okay, I want to start with Dollar Tree.
Yeah, Tim, so a bright spot today amid all the decline. Shares closed up 3%, and this is after they announced that they're offloading Family Dollar for about $1 billion to Brigade Capital Management and McCallum Capital Management. I hope that I pronounced that correctly. This comes about a decade
I think it's
after
how I said it earlier,
Yeah,
so
you're
good.
Was it McCallum?
I don't
know. But anyway, the deal is set to close next quarter. This comes about a decade after they bought this company for $9 billion.
I so remember when the two of them came together and everybody was like, this makes sense, like the two big players coming together, and yet
And for a while they really did want to become this big discount giant, but that hasn't really worked out for them. That business hasn't really been profitable, and actually this kind of upends that effort because the store count will be roughly halved after the transaction. But analysts really see this as a good thing given how long they've taken to find the right buyer for this. If you look at some of the Wall Street commentary, it's been really positive, even though there's a little bit of uncertainty about how this will play out in earnings. At this point, Citi said that the sale is positive and makes, quote, a cleaner go-forward story for the stock. And then you have Truist also calling the sale a significant win, hence that move higher today, even as the broader market sold off.
All right, off to love my dogs, Chewy.
Yeah, one thing that can weather any potential downturn, any recession, is how much people love their pets. You saw that today in Chewy's earnings. Exactly, as you should be, their family members. Chewy reported some solid earnings today. The stock was down about 1%, perhaps due to pressure in the broader market, but it did get a wave of analyst upgrades. It got raised at Mizuho, Barclays. Their top line figure grew 15% year over year to $3.25 billion, and they're basically at the stage where they've been spending a lot of money on things like marketing, a lot of investments. So those expenditures have kind of made it difficult to turn a profit, but we're actually seeing them start to grow their sales.
I gotta say, it's where we order order our dog food and lots of stuff.
Yeah. We ordered our cat food there until our cat died. And
sorry to hear that.
I will tell you though, something about Chewy that's pretty cool.
What's that?
I called them and I said, hey, we just got this big shipment. The cat's gone.
They take it
Can
back.
I send it back to you or something like that? It was a huge thing. And they were like, donate it. We're going to refund you. And they sent this really nice card. It was really sweet. Yeah.
That is super sweet.
I know. It was really sweet. That's the type of stuff it's you remember as a customer, right?
Totally.
Yeah.
Right, or tell others.
That
and
makes for a
recommend it.
good business. I've actually heard some of my friends too have lost pets, and Chewy sent them little cards with their condolences, which is really wholesome.
It is really wholesome. It's a perfect way to describe it.
You know what's hot right now?
What?
Copper. Everybody's talking about copper.
Yeah, it did hit a record high yesterday. And this company, Freeport McMoran, actually it's MacMoran, was mispronouncing it. It's a copper mining company. It did fall today after the Trump administration signaled that tariffs on copper could be coming in weeks rather than months. A little bit of uncertainty around those tariffs. But it did do well the last couple of sessions. The company shares have also outperformed the S&P 500 this year. They're up about 13% on the year.
Compared to a lot of names that have struggled this year, that's pretty significant.
Joe Doe. He's the guy to talk to.
The copper guy.
He's the copper guy to talk to.
He's the copper guy.
Yeah.
No, I feel like we're going to be keeping an eye on these names as more tariff information comes out. It's certainly something that's going to be front and center.
Yeah, absolutely.
Alex Semenova sends good tweets.
Oh, thank
you got to see her tweets. Last week, okay, I'm on the plane.
This is what I live for.
I'm on the plane, okay, and I'm just doing what I do on the plane. I'm scrolling through Instagram, and a friend of mine who doesn't know Alex, but she's a journalist, She had one of Alex's tweets in her Instagram story.
I'm honored.
Do you know what a big deal that is?
It is a big deal.
Do you know what tweet it was?
Which tweet was it?
Because you write so many good tweets.
Oh,
This was your tweet about what it's like to be like a journalist, always feeling like you have homework.
Yes, that one.
She's a journalist too, so she posted it. You know, it's like, yeah, everybody
Doesn't
feels
it
that.
always feel like we have homework due? Like you can never truly relax. There's always something that you have to read up, especially with all these, markets announcements.
I will tell you,
He goes home.
in broadcast,
You will go.
with the daily show, when the market's closed, our show's over.
Yeah.
I'm kind of done.
Yeah. It's good. I think it's harder when you're like in print and like
Yeah, you're
things
always
are
like, I
is
have to be
different.
pitching the next story.
Yeah.
I have to
And you can
impress my teacher, my editor.
You can always do more edits and stuff.
Yeah.
But when you're live, you're live.
Exactly.
You're
Yeah.
stuck with us.
Yeah.
Yeah. We're kind of done until the next day until we've got to,
Then you have a
new show
fresh
to do.
start the
Yeah.
next day, but it's just as crazy.
Maybe
It
it's
is
just
just as
because
crazy.
it doesn't feel like work, Alex.
Yeah.
That's what it is.
Because we're having so much
We're
fun
having
here.
so much fun. Every day is a holiday when you're doing what you
stick
love.
around and work kind of, a little bit later.
Some of us leave right at 5:01.
Well, I'm going to take inspiration from this and leave after this.
That's what I like to hear.
Do a tweet, put it out there, because it'll definitely get picked up.
Now the pressure is on.
It is. Alexandra, thank you so much.
Thank you, guys.
Really appreciate it. Bloomberg News equities reporter Alexandra Semenova with the Wednesday stock movers. All right, you got about a minute, 50 seconds, and you're out of here.
Well, I want to know what the market's going to do tomorrow. We saw the NASDAQ 100 fall 2% today. We saw NVIDIA get hit. The Mag 7 just saw a slide today. NVIDIA, Tesla, Microsoft, all on the downside.
Yeah.
Also waiting to hear from Trump about these tariffs.
Yeah, I think this is a big thing that's really been driving the markets, and I think it's why, again, we saw a bit of a pullback today. Worries about what's still to come on that front, and is that the end of it, or is there more? April 2nd's just around the corner, so yeah. And I'm guessing our next team is going to cover it. That'll do it for us. Have a good and safe evening. Balance of Power starts right now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Joe Matthew, I'm Kaylee Lyons.
President Trump set to announce tariffs on autos from the White House any moment now, a week before his planned Liberation Day reciprocal tariffs. Mary Lovely of the Peterson Institute joins us with more.
The announcement coming as the White House faces renewed pressure over the Signal group chat detailing strike plans in Yemen after the journalist who was inadvertently added released the full exchange. Former Congresswoman and DOD National Security Specialist Stephanie Murphy will have reaction.
And the Congressional Budget Office warning the federal government could face the risk of default as soon as August as Republicans push to raise the debt ceiling as part of a budget reconciliation plan. We'll have more with Republican Congressman Brian Stile of Wisconsin as we zero in on the X date. Thanks for joining us on the Wednesday edition of Balance of Power here on Bloomberg TV and radio. Kaylee, we're waiting news from the White House any moment now from President Trump, who's not talking about Signal. He's talking about tariffs.
Yeah, auto tariffs specifically, something he has been teasing for some time. His remarks were scheduled to begin at 4 p.m. Eastern time. They have not begun as we begin this 5 o'clock hour. But of course, we did get a little preview from the president earlier today in the East Room.
Right after this, we're going to be making a big special announcement, Howard and I and Scott and a few of the people on cars. We have Liberation Day in America. That's where we take back all of this money that's been ripped off from us for so many decades.
The president referencing Commerce Secretary Howard Lutnick and Treasury Secretary Scott Bessent for more. As we wait for the president to speak live, we turn to Bloomberg's Joe Doe. It's great to have you with us, Joe, on Balance of Power. What do we expect to hear this evening when the president talks about auto tariffs? There's been some reporting that it may not, for instance, include auto parts.
Right. I think that's the big discussion, right? Is it just assembled or does it include parts? That's obviously the big question. I think there were some questions thrown at the White House earlier about like what kind of details we should expect, and so far there are just no details out there. So the market's going to be waiting to find out what that is. At least they now know that they're going to get an announcement today.
Well, and it's this announcement with the announcements we've already gotten in regard to steel and aluminum tariffs, with the expectation we'll have an announcement next week on Liberation Day about reciprocal tariffs, with the suggestion, according to Bloomberg's reporting, that we could soon be getting an announcement on copper tariffs. Joe, how do all of these layer on top of one another?
Yeah, I mean, it's pretty wild, right? There's so much tariffs to a point where everybody in the market is maybe a little bit confused. In many cases, you have traders, hedge funds just sitting on their hands waiting to see actually what comes out. I mean, the tariff on copper, as you mentioned, we broke exclusively last night that the timeline has been shortened compared to what the market was expecting. I mean, now we're expecting weeks before a tariff is announced on copper, and that is opposed to the months that people were expecting it to be. I mean, Goldman Sachs had said in a note to its clients earlier this week that they expected the announcement to come into place sometime later this year. You add on top of that the tariffs of steel and aluminum that already exist, the auto tariffs that are about to come, and then, of course, you have reciprocal tariffs. And, of course, on top of that, you have the questions of what's going to happen to Mexico and Canada. All of this is a lot, right? And the worry is, of course, you have to start stacking tariffs. I mean, on the autos alone, if you're talking about parts, right, you're talking about aluminum and you're talking about steel, sometimes these things cross the border multiple times, especially between Canada and Mexico. And the worry is really, how is that going to compound? That's the kind of extreme concern that you have as an investor in these markets, when it's impossible really at this moment for you to account for what you're supposed to expect.
All right, Bloomberg's Joe Do, great reporting. Thank you so much. And for more analysis as we await the remarks from President Trump, we turn now to Mary Lovely, Senior Fellow at the Peterson Institute for International Economics. Welcome back to Balance of Power, Mary. As we wait for President Trump to make this announcement on autos specifically, to the point Joe was just making, can we really view these auto tariffs in a vacuum, or is their economic impact not so much about those tariffs alone, but how they work in conjunction with all of the other levies we have seen or expect to see?
Oh, yeah, it's great to be watching, waiting for this announcement with you tonight. Joe's absolutely right. We're waiting to see how these tariffs are going to interact with one another. What we do know already is the tariffs on steel and aluminum, such as they are, will increase the price of steel in the U.S. That will drive up the cost of autos. We've already seen auto prices going up. That's going to continue. These tariffs, if they go ahead tonight, will further increase the price of autos. And of course, it will reduce domestic sales, because people are getting to the point where they need to drive their vehicles longer, postpone buying that car, because the price will be increasing significantly depending on the rate that's announced tonight.
Mm-hmm. But wait, Mary, this is Donald Trump. Aren't we going to have a 30-day review period and everybody comes back in off the ledge after the president makes the first announcement of the first salvo?
Well, we may, and that presumably is to give time for our trading partners to negotiate. It's not clear what will be negotiated in this case. One of the problems with driving up the cost of producing in the United States is that, low tariffs no longer become viable. The U.S. has a 2.5% tariff on vehicles. That has allowed the U.S. to have a vibrant market. It has allowed sort of niche consumers to find vehicles that are made in other countries for sale here. Cars that are sold in large quantities, minivans, SUVs, tend to be, made in North America. So we're going to see reduced